I see from Abrian, I'm a member of Kappa Alpha Psi. I thought about mentioning an investment club with my chapter from Alcorn State. Do you think that's a good idea? Yes. Yeah, if you're on like a listserv with people from your frat, that's a great way to go. You know, the best way to really connect with people you love and to do right by them is to help them find ways to make more money. If you want to help a person, if you want to help a Black person in America that you care about, help them pay the bills, help them and their family get on a secure financial footing, take away the stress of financial insecurity. Investment clubs, I think, should be a natural thing that everybody does. Give me a second, I'm gonna plug in my mic. Hold on. Okay, give me a yes or no if you can hear me okay. I'm trying to switch microphones, and it's still not letting me switch. Hold on, are you all able to hear me okay? Am I coming through all right? Okay, yeah, so, okay, great. Yeah, so, I personally think that investment clubs are wonderful. I personally think that you should, here's another little tip too. Every Black family should have a family business. And the reason every Black family should have a family business is because when you have a family business, the write-offs are wonderful. The tax write-offs you can get are really awesome because you then have the ability to, you can do things like, you and your family can like go on a vacation. And as long as you're doing business, you can write off a portion of that trip, as long as you're legitimately having like business meetings and things like that. So if everybody in your family has their own business, like I have a business, my brother's a business, my sister's a business, my parents have a business. So when we get together as a family, we have legitimate legal business issues that we discuss. And the other thing about you know about having a family business is that it, you know and is that you start to get to the point where you start talking about business just because you're talking, because think about it. Think about how often people, imagine if like you got two relatives, one works at UPS and the other one works at, I don't know, FedEx or Walmart or something. And they're both at work all the time. They're both serious about their careers. They're both getting promotions to middle management and stuff like that. Like, it would be very natural for them to talk about stuff that's going on at work. Yeah, at our job, this is what they're doing. They promoted me over to such and such, and the such a job came available. Like you just talk about the things that you're interested in, the things that matter, the things that make a difference in your life. If somebody gets a promotion, everybody, is excited. You have a party, stuff like that. So I think that if you create a culture of economic prosperity and economic togetherness in your family, then that's going to really pay a lot of dividends that go beyond just money in the bank. The money in the bank will be nice, but you will also have a connection that you didn't have before. You'll have a type of empowerment that feels really good, where you'll just sort of feel like you can create whatever reality you want to have, especially if a couple of you, all it takes, and that's the other thing too, success spreads like the coronavirus. Success in the family spreads like a virus. If you have one person in the family, let's say five of you, you got four siblings and all five of you start a business, and one of you really makes it work. One of you figures out how to make $100,000 a month in your hair care products business. And and as a result of that, you get all this training, expertise, resources, etc. Well, it's easy at that point to put your relatives in business. You could train you could train the people in your family to come work with you. You could train them to run branches of the business. You could train them to run companion businesses that are what's the word, complements to your business. So for example, if I run a successful coffee shop, and I say, I know all my customers want donuts with their coffee, and but I just don't have time to make the donuts. Well, maybe your cousin says, I like to bake. So you provide the capital, you become the bank, you provide the capital, you set your cousin up with a donut shop next door. Next thing you know, you're making coffee and donuts, and you're collaborating on a lot of things, and you're gaining a lot of economic power that comes from working together. Or one of you has a successful business that has a good customer base. Then at that point, you could do what Amazon did. The way Amazon became a big company was, the first thing Jeff Bezos did was he developed a customer base. And he sold products. He sold books, not products. He sold books super cheap. And he developed this massive database of customers from selling books super cheap. So then he was like, well, he would ask the customers, like, well, what else do you want? And the customers were like, oh, we want to buy these, we want to buy this, we want to buy this. So he's like, oh, great. So we could have people come through and sell to our customers and we just take a little fee, a little piece of the profit, and we allow them access to our customer base. And that's how Amazon grew into, I think they're about 1.5 trillion, 1.6 trillion, something like that. So that's how they grew into that. Company's worth over $1 trillion by literally developing a customer base, making those customers really happy, and then creating avenues through which other people can sell to those customers. So my point is to say that if you have a family business, it's really, really cool, because wealthy people, the reason wealthy people are wealthy is for the same reason that LeVar Ball's, all three of LeVar Ball's sons are in the NBA. Basketball is a part of their culture. They talk about basketball, they live basketball, they're thinking about basketball. They practice basketball all the time. So now all three of their sons are in the NBA, and their father has the shoe brand. Well, the same thing is true with any type of business. Whatever you're interested in, whatever you're obsessed with, is what your family is going to get good at. So a lot of families that have a family business, they're literally able to almost write off their entire lifestyle because their business is a part of their life. So, and their life is a part of their business. So their family will go and spend $100,000 renting a yacht, and will go out to, on a cruise to the Caribbean on their private yacht, and we'll be able to write that off as a business expense because they're on the yacht having business meetings, but really they're on vacation too, right? So it's like kind of a mixed thing. So again, it's not a matter of doing anything that's like against the law or whatever. What you want to do is use the law in your favor. And the people, what I have found is that in America, when it comes to wealth, the people who do the most work get the least reward. The people on the bottom do all the work and they get the least reward. So, and you hear politicians sometimes talk about it, where they'll say, why should a school teacher make less money than such and such, a famous person or whatever. Well, it's because of the way our society is structured, unfortunately. Now, I'm not saying don't be a school teacher. I'm saying that if I was going to be a school teacher, I'd be a school teacher who owned a business, or a school teacher who ran a school, or a school teacher who had a private tutoring service, right? There's a lot of different ways to be a school teacher. The worst way to be a school teacher, I think, is to work for the school district, right? But if you know business, then you can work around the school district, get yourself a little customer base, and end up making 3 times more money than the average teacher. And you still get the joy of teaching, but you also get the freedom of teaching who you want, where you want, when you want, etc. So I think that's why I would argue that the most important thing you can do for your family is to create a culture of economic development, economic growth, not just working for business, but building and creating business. That's why Powernomics is such an awesome set of ideas, is that Powernomics basically says that, that with college graduates in the Black community, Black wealth hasn't gone up, even though we've had more college graduates. Because what they do is they take your wealth from the back door in. It's sharecropping. They take all your wealth because they put you in a ton of debt. And then also you never get the benefits of business, actually, when you're just an employee. Your community has no businesses, so you have no businesses in your community to work for. So you have to go work for white people. So you're kind of boxed in. So when you end up going to work for white people, their businesses go up in value because, there are all these studies that show that when they have a more diverse employee base, they do better. When they have a more diverse customer base, they do better. I covered this conversation on the Black Financial Channel today, where basically they were talking about how Disney was really excited about the power of diversity when they put out the Black Panther movie. The Black Panther movie made about $1.3 billion. And they said, wow, this really shows the power of diversity. So if we get Black people as our customers, then we're better off. And also if we have Black people as our employees, we're better off. And that makes perfect sense. So I perfectly understand exactly why they want Black people as their employees. But the thing about it that you have to understand is that, when they make $1, you're getting 10 cents, right? Or whatever. They're getting 90 cents. Right. So you're thanking them by saying, thank you for bringing us into your system. And thank you for recognizing the power of diversity. Thank you for recognizing the power of the Black dollar. And I think that's a very dangerous line of thinking, because when you're sort of running around touting in pride how these other corporations are making so much money by using you, that's really the most interesting example I think of in terms of real life is like, if your daughter is like really proud that she slept with the whole football team, like all those boys like me, they really like me, right? So as a parent, you would obviously sit your daughter down and say, okay, sweetie, let me explain what love actually looks like. That's not love. They're using you, sweetie. That's not, I'm not judging you, but that's not good for you. That's not healthy for you. And it's also, it's not good for your reputation. It's not good for your self-esteem. It's also not, I don't think that's real love. That's not real love. That's something else, right? And so, but a person who doesn't understand those things, who has a self-esteem issue, would literally think that that was good. But obviously we know all attention is not good attention. So with white society, I think they give us a lot of attention, but it's not always good attention. It's attention that we get because we make excellent customers, excellent consumers. Uh, but black media plays a part in this because there are a lot of articles that you could probably find right now in Essence Magazine, Ebony, et cetera, that have been written over the years, or even Black Enterprise, bragging about the power of the black dollar, the power of the black consumer, the power of black spending. There is no black spending power. There is no such thing as black spending power because spending does not give you power. Black investing power is what you're looking for. So what's the power of the black dollar when it comes to investment? That's what real power ends up looking like. Okay. So, let me see here. Next question. Glenn Ford, I do 2 to 4K a week, day trading options, buying calls and puts. What is a reasonable return? I can make weekly selling out of the money options with 20 to 25K seed money. That's a great question, Glenn. I think selling options, I like selling options because if you sell the options, you don't actually have to, wait for the stock to go up in value. You can sell it. You can make a return on your portfolio the same way a landlord makes money from owning a building and renting out the units in the building, right? So you're literally you literally have this land. So you're not a sharecropper. You're an actual farmer that actually owns the land, right? So you have these shares of stock, and you're basically selling these options on the stock. Either you're selling calls, whether they be in the money, at the money, or out of the money. And excuse me, or you have cash and you can sell puts. Remember, don't forget you can do that too. Where you basically are guaranteeing, you're selling insurance at that point. You're guaranteeing that if the stock price hits a certain point, I'll buy it from you, right? So I think that with 25K seed money, I think that if you pick the right options, the amount of return that you can make from that depends on whether you pick the right options to work with. But I think it's very easy to make an ROI of say 20, 30% a year, right? Maybe more, right? Maybe more than that, but at least, 15, 20% a year. So off of 25K investment, you're talking about maybe 5 to 10K extra income per year, or say a little bit less than $1,000 a month. But actually you may even go further than that. Maybe the key idea is that options that have high implied volatility tend to have the highest premium. So ultimately, you would form a portfolio of options that have good premiums. So it's like if you rent apartment units, you would have some buildings where the rent is really low, some buildings where the rent is really high, depending on what neighborhood it's in. So you want to find the buildings that have the high rent, right? And also you could decide whether you want to go with out of the money options, at the money, or close to the money, or whatever. So I tend to focus on options that are out of the money, but maybe 5% out of the money, maybe 10% out of the money. And so that means that if the stock price goes up and I have to sell my shares at the strike price, then what I would do, you make money from the premium. That's the money you keep no matter what. Then you make money from the price appreciation because you didn't sell the entire upside. You sold a piece of the upside, right? You basically, the stock's at 25 and you're basically making a contract that says, okay, I get everything up to 28. And then after 28, the rest belongs to somebody else. And I sold that, right? So that's a nice deal. And then at that point, you can make a decision whether you want to go back in. But I think writing options is a great way to generate income. And actually, I did a whole masterclass on options and stuff like that. If anybody wants to take a look, if you go to stockoptionsmasterclass.com, that's stockoptionsmasterclass.com. There's a full recording of the stock options masterclass. And we did talk about writing call options. And also, I'm going to do another stock options weekend, probably in February after the Black Wealth Bootcamp is almost done, where we're going to actually talk about the process I use to generate my money from options. I love stock options. I don't really like to speculate and hope that the price goes up. I'd rather just go ahead and sell the upside and then let somebody else speculate. So there you go. Let's see here. Abrian, I'm called into ministry and I'm trying to figure out how to implement these Powernomics principles from a biblical perspective. However, most Black Christians are whitewashed with religion. Chapter 8 talks about this in Powernomics. Yeah, Dr. Anderson does talk in Powernomics about whitewash with religion. But there are Black folks that go to church who really do believe in Black empowerment. I haven't given up on the Black church. I think that we have a lot of, first of all, you can't give up on the Black church because that's one of the great institutions in this country. The Black church is it's a natural bank and it's a natural economy. It's a natural economic system. Any pastor who wants to help his flock or her flock should have a group of people that are well trained in ethical economics, who can come up with infrastructure that will allow them to develop an economy around the church's ability to gather resources. So if you remember, there's three C's to an economy. You have to have three markets: a market for capital, a market for contractors, a market for customers. All that means is that you have investors. If you have a new project, you can find people to invest in it, and you can find a way to allocate that capital to make money. So you got good ideas partnered with with investment capital that creates wealth, right? It's like a boy and a girl, not a boy and a girl, a man and a woman get together, boom, they make a baby, right? So good ideas come together with capital, great things happen. The investors are happy because they get to make their money works for them. They don't have to do any work. And the people with ideas are happy because they've got the engine, the economic engine that can turn their ideas into reality. And then the second market is a labor market, basically the market for contractors. You got people that have skill in the church right there, right? Black people are very wealthy because most churches are worth millions of dollars, even if they don't have any money, because right in your congregation, you've got people that have all kinds of skill. You've got accountants, you've got lawyers, you've got real estate agents, you've got bookkeepers, you've got laborers, you got all kinds of people that can do a lot of stuff. So you bring together laborers with people that supply jobs, then boom, great things happen. Dr. Anderson talks in Powernomics, and he says that you cannot build a business, you cannot build wealth without labor. That's why slave labor was so important. So they needed your labor in order to build their wealth. They just didn't compensate you for it. But you bring together the laborer and the job creator, and boom, you grow a business out of that because you already got the capital, right? From stage one. Stage three is a market for customers. This is where your business becomes real. If you have the capital to start the business and then the skilled labor to create the product, well, now all you need is a customer. That's the person that you sell the product to. You fulfill a need for that customer in exchange for a markup. That markup is called a profit, or revenue is in there as well, right? So boom, you get a producer and a consumer together. Boom, the magic happens. If you have a business and you have customers, then you win. So if I ever want to make you rich, all I got to do is when people come to me and they say, hey, I really want to make more money, I will say to them, okay, do you have a good idea? Yeah, well, I want to do such and such. Okay, do you have the capital to pursue that idea? Yeah, I found some people to invest. Okay, great. Now, do you have the people with the skill to make that idea become real? Yeah, I created a great product. It's a great website. All people have to do is hit this button to make money. Okay, great. Now let's go to stage three. Let's present your idea to potential customers so they can go and buy into your product. And here's the thing. This is why this is the easy way to turn your child into a millionaire very easy, very early. It happens all the time. Is if your child is like, say, into technology and they've created like some sort of product online or an app or anything, and all they need is somebody to click a button and buy a product from them, and each person's buying something for $20 or whatever, and they get a chance to present that in front of a big audience. That's why audiences have so much value. That's how white corporations can extract so much wealth from the Black community, is because they have audiences, they have distribution. Jeff Bezos built Amazon because he had an audience. So basically, I bring my audience to the product. 10,000 people see it. 1,000 of those people buy the product. So your son is selling a $20 product. Your son makes $20,000 in 10 minutes. Right, which is a whole different type of income generation than working a job and working 50 hours a week for the next year or whatever. I call it almost like an economic wormhole or an economic time machine. Time and space are extremely important in terms of finance. So when I talk about the reason I call it economic wormhole and economic time machine, it might be partly driven by the fact that Alicia and I are big Star Trek nerds. Like, we love Star Trek so much that we're actually studying Klingon together. Those are the nerdy things you do when you love a Black woman that much. And I do love her that much. I'd follow her to the end of the earth. But anyway, as we're sitting there as Star Trek nerds and studying Klingon together, in Star Trek, these concepts of time machines and wormholes always come up. Time and space. How do you travel through time very quickly? How do you travel through space very quickly? Well, when you understand economics and finance, you find that there are time machines and wormholes everywhere. And to me, economic wormholes where you can travel through space very fast, right? Because the wormhole is the bending of space-time, right? So space, when I think about space, I think about wealth as space. What does that mean? What is a wealthy person versus a poor person? Well, you think of wealth mathematically as like a road. Like we're traveling down a road, and maybe the poor people have only traveled a mile. The rich people have traveled 10,000 miles, right? So you're traveling through a lot of space. So the question is, how do you get through that space very quickly? Well, that's where the economic wormhole comes into play. So having a system in place where you are able to instantaneously go from 1 mile to 10,000 miles, that's where having the scalable business comes into play. It becomes an economic wormhole because a person that's very poor can become very rich very quickly. An example is Super Scent, the lady that was in Essence, because she launched her makeup brand and made $1 million in an hour. Right? How does a person make $1 million in an hour? Well, you can't do that if you are working at Costco or something, like, or you're an employee at Office Depot. You make $1 million in an hour because you got a financial wormhole that allows you to travel very, very far, very quickly. And the way you do that, mathematically speaking, is you've taken time out of the equation. What does that mean? That means that the amount of money you make is no longer dependent on how many hours you work, right? So when you grow up and you're taught that the more hours you work, the more money you make, well, what they're naturally doing is they're giving you a very slow, very difficult way of making money. What you want is a method of making money where time is not even a factor anymore. Even lawyers who make, $500 an hour, that sounds like a really great job. That was, to me, like a dream come true. I used to grow up thinking that would be awesome, right? But here's the thing: I know lawyers who make $400 or $500 an hour, but they work themselves into the ground and they're exhausted and they have no free time. They can't enjoy their life. So that's not the optimal way to go. The people I've seen really make real money are the people that can roll over in their bed, open up their app on their E-Trade app, sell a couple stock options, and literally have $50,000 in their bank account and roll right over and go back to sleep. Like literally, I've seen, like, this is real life. There are people who really live like this, and they weren't born with an inheritance with a silver spoon in their mouth. They put themselves in that position. But economic training and knowledge is important to understand even how that even happens, right? That's the pinnacle of wealth. Okay, is when you can literally make more money not working than people make money by working. So there's 4 stages to wealth, in my opinion. One is the first stage of just being able to get the money you need in order to survive, maybe getting a job or a high paying job. Most of us never learn anything beyond stage 1. Stage 2 is where you buy your freedom. You buy your way off the plantation by buying yourself a job. You become like the 99% of all Black business owners that have a business with 1 employee, right? You become the jack of all trades. You do everything. You do all the accounting. You clean up the office after the day's done. You schedule your own travel. You make all the business decisions. You make the product. You do it all. Stage 3 is which is another level of economic success, if you want to call it that, is when you learn how to scale and you learn how to delegate. That's when you learn how to work as a group, work as a team. You learn how to create and nurture healthy, productive relationships with other people so that you're all on the same page. And so you end up spending more time managing people and managing relationships than you spend actually doing the work and making the product, right? That's when you're able to scale, because then when you fuse that with technology, then you have this really awesome scenario where you're starting to build your financial wormhole, where you're able to make a ton of money really fast because you're not working 40 hours, 50 hours, 60 hours a week anymore. You're working 10,000 hours a week, right? That's because you've got teammates, right? And Dr. Anderson talks about how Powernomics is a team sport. Economics is a team sport. So if you work together with teammates, you can accomplish so much more, which is why the ability to manage relationships and to delegate tasks to other people. You have to be able to sort through the tasks. Okay, these things need to be done. Here's how we're going to structure the teams. Here's how we're going to create the systems. The ability to build systems is really a tremendous superpower for a young person to have. And then stage 4, the last stage, is where you're not working at the business at all. You don't have to go to work every day. You don't have to talk to anybody. You don't have to make any phone calls. You're literally just managing your assets, managing your capital. So what does that mean? Well, that means that, sure, I hate it. One thing you should stop letting people tell you. Stop letting people tell you that everybody isn't built to be an entrepreneur. Everybody's not cut out to be an entrepreneur. We know that. Some people aren't, right? And I don't want to hear that anymore. Like, that's just, everybody's not cut out to be a slave either. But we got a lot of slaves. Everybody's not cut out to be a football player or a rapper. But we have an oversupply of 40-year-old rappers. We know this, right? So instead of looking at it that way, maybe a way to look at it is to say, yes, maybe everybody isn't cut out to run a business, but everybody can benefit from owning a business, owning a piece of a business. So if I own stock, I own a piece of a business. When I talked today about Disney, and Disney is making these moves with the Black Panther, and they're making all these moves with Disney Plus and everything. I wasn't talking about it in a way to say, oh, look at these white people, they're taking all our money, this is terrible. Yeah, it's sure the conversation may start off in that direction, but it finishes with saying, get in, I think you should get in on some of this. I am a shareholder of Disney. So when Disney announces, hey, we made another movie for black people, we made another $1.3 billion, I say, yes, we did it. Look at us. Look at how much money we made, right? It's not no y'all, how much y'all made. No, I'm in there too. My kids own Disney stock too, because we want to be on that bandwagon also. We want our wealth to be connected to your wealth, so that when you make money, we make money. And that's the beauty of the open financial markets, is everybody can participate. And I encourage you to look into that. If you haven't done it yet, I really think stock ownership is something you should do. So and one day I'll spend more time talking about the concepts of financial time machines and financial wormholes, because I didn't even talk about the time machine part, but I literally want to stop talking, because what happens is all these thoughts sort of go through my brain and I feel the need to let it all out, and I end up talking all day long. So one day I'll just do a whole lecture on financial time machines and wormholes, and explain it and show it visually, so I don't end up talking, sound like I'm crazy, but there really is such a thing, and it's really a great way to understand financial concepts and how money works. All right. So by the way, the options masterclass is stockoptionsmasterclass.com. So feel free to go take a look. Vernoy says, what would be the economic goal of the investment club, and what would be the dues, monthly or annual? Well, it depends on how you want to do it, Vernoy. So Carmelita, if you could put that investment club lecture in the Powernomics curriculum. So if you log into powernomicsmasterclass.com, there'll be a lecture in there called How to Form an Investment Club. I do this also in the Black Wealth Bootcamp. So those of you that want to join the bootcamp, we start January 7th. You can go to blackwealthbootcamp.com. Blackwealthbootcamp.com. You can still get the early bird discount of 30% off. So feel free to go to blackwealthbootcamp.com. And the thing about an investment club is you can structure it however you want. You could have no fees at all. Or you could have a monthly fee. But the key thing is you have certain rules you have to follow. Like, you can't have more than 99 members. You also have to make sure everybody votes on the financial decisions of the club. You can't have it where one person is making all the decisions, because then you're getting into that money management kind of space. And that's where you have to register with the SEC and, stuff like that. So there's a structure, there's a way to do it. But the lecture will be made available to you. Let's see. Aisha says, I never heard of an investment club. I love the idea of buying black. However, it will not benefit. Can an investment club open a black bank? You know what? Here's the thing, right? I tend to be of the belief that banks are not always necessary. I know we all get excited about black banks, and there should be more, but I wouldn't over invest in the idea of a bank, of a black bank kind of being the be all end all for the community. First of all, some of these banks, they're just lying. Like, they're not really black banks. They just make you think that they're black banks. And so on one hand, that's a sinister thing. But on the other hand, honestly, I care less about who owns the bank as much as I care about who gets access to the capital. That's really it. So if a community bank comes in and is really making loans to the people in the community and really helping those people build wealth, it doesn't, if a black guy owns it versus a white guy, either one of those people is probably a capitalist that takes care of their own family anyway. And they probably have a board or they have, investors that are very diverse. And so I'm not really so much into, when it comes to banks, because banks have such an important function in the world. I'm not as much into who owns the bank as I am into the conduct of the bank. And the goal of the bank, it's like in a way, maybe you could think of the bank like a church, and churches are like banks. They're kind of similar in that you have a goal that's bigger than just existing and making a profit for yourself. It's more so about sort of the souls that are connected to your church and how much are you improving the lives of the people that go to your church. So with a black bank, you've got your church as your depositors. You got all these people depositing money with you. Are you enhancing the lives of those people and the people in that community by taking those funds that you pulled together like a susu? Basically, it's just a susu with interest, kind of, right? So you pull together all these funds in this corporate susu, and are you loaning that money right back into that same community? That's it. Because the thing about it is the bank is then thinking, how do I get a good return on my investment? I got the way banks make their money is they will get the money from you. You put in your checking account, your savings account. They're paying you almost no interest, pretty much, right? And then they're loaning the money out, but they're charging interest on the loans. So they're making the interest from the money that they're lending out that they collected from the depositors. So when they're making those loans and making those in, because a loan is an investment. A loan is pretty much almost, it's quite similar to an investment, just different dynamics and parameters in terms of how you get paid. A bank loan means the bank just wants their money. That's it. They don't want equity. Whereas an equity investment, they want more of the upside, but they take a risk because they're taking on the downside too. So what I really would look at it with a bank, any bank, is are you making investments that enhance the wealth of the community that you supposedly serve? Doesn't mean I don't think black banks are a good thing, but the function of a black bank can actually be performed by black investment clubs, black venture capital groups, just any compilation of capital where the objective is to position that capital in such a way that that it provides a resource to the black community. And I personally think that it has to be done in a way where it's where the values are black first, but you don't have an imposition of the value system of the people that actually control the capital. So, for example, I get a little nervous when I hear about a black-owned business that gets millions of dollars from white people, because I'm like, okay, so basically the white folks are making this investment. They're going to change the direction of the company, and they're going to take a big chunk of the profits, right? That's kind of so really when people raise money, you should ask, where did you get the money from? Because money is power. And so when it comes to black banks, we can form black banks. Like my family has its own bank, basically. Our bank is basically a collection of assets that we own, that we've compiled through time, that we use to make loans and investments in each other. That's it. And the purpose of our family bank is to do things for our family. That's it. Like if you my cousin them or whatever, and you need $5,000 to get a business off the ground, and you have shown yourself to be credit worthy, not because of your credit score. I don't care what your credit score is. But me and grandma and cousin Willie know if you are a person of integrity and you pay your debts back. So we form a contract, and you tell us not just how great your idea is, but you also tell us how the family's going to benefit. The family's going to make an investment, because if I give you 5,000, the family needs to get back more than 5,000. The family bank needs to make a profit for you to get your capital, and that's pretty much how it functions. So black banks, I mean, I'm not saying that they're not important. I'm just saying that I don't think black banks are what's going to really get us out of our economic challenges. What's going to get us out of our challenges is not so much what the institutions do or what the leaders do. It's what the families do, what individuals do. If everybody in the community that had a family, control of a family, was committed to creating economic values within that family, values that are bent heavily toward having a skill set that leads to asset acquisition, then those families will become rich. America is not a great country in a lot of ways. America is a crooked country in a lot of ways. But America is not as crooked and as terrible as it was in 1850 or in 1905, when your grandparents were trying to build stuff and people would just show up and burn it down and kill them and take their farmland for no reason and stuff like that. There's still crooked stuff that happens, but it's not as bad, I think, now as it was in the past. So if you have a family where you basically train everybody in the family on the fundamentals of, and I could probably do this for your family in probably like 2 days, literally, it doesn't take that long to learn these things. The fundamentals of why it's important to own stock, why it's important to own real estate, why it's great to have your own businesses. That will go a long way, because here's the other thing too, when it comes to training and elevating the economic consciousness of a people, all you need to do is spark the match. It's like if I want to burn down the California forest, not that I'd want to do that. The California forest fires were not started by people who were consistently going in there setting thousands of fires. It was set by a few people who sparked a couple matches that eventually burned on their own and continued to grow. And so when I'm teaching you, if I'm teaching your kids or whatever in the Black Business School, my first objective is not so much to focus on all the minutia of how to build wealth. It's really the most important part of that process is to convince them of the why. why wealth building is important, why this makes your life better, why this is going to give you happiness and freedom. And then what happens is when people get the why, they figure out the how on their own. At that point, I don't have to do much of anything else, because even if I'm not talking to them anymore, they're going to go get the information because now it's part of their core value system. It's like this young lady I used to mentor, you know, when I used to talk to her about reading certain books to get ready for college, and she never wanted to do it. You know, she was bored. She had a short attention span like a lot of young people. But when it came time to get a new iPhone, this was hilarious to me. She's broke as a joke. Her family did not have a lot of money, and the new iPhone would be like $1,000. But because her friends made her feel like having a new iPhone was really important, she always figured out how to get the money to get an iPhone, because she had already embraced, she had internalized the why. Like, this is why I need a new iPhone. I'm going to go the how, I'll build the bridge to the iPhone somehow, but she'd had the why. But with the other stuff, if I say, here, read this book, this is going to make your future better, because she didn't have the why, it's like, I don't see why this even matters. So then the how doesn't exist. It's like, oh, well, I couldn't, the dog ate my homework, or I didn't have enough time to read the book, or whatever. Right. So that's what it is. It's really culture. What you're really dealing with is economic culture that's built on slavery. So you have to build economic culture that's built on something different, so that your kids will fill in the void. Don't feel like you got to do it all. They don't have to be financial experts. Again, the Black Business School, we can help you. Like, we have blackmillionairesoftomorrow.com, which is our program for kids. It's blackmillionairesoftomorrow.com. So feel free to take a look. But so we can help you. But really, it's about the why, right? Give them the why, and then what's going to happen is over the next 20 years, they're going to fill in the void on the how. I know, last point I'll make on that is, I knew a 30-year-old kid who was like a multimillionaire, 30 years old. He's making all kinds of insane. He's making about $200,000 a month on his business. And he had a bachelor's degree, I think. And I said, well, what made you into such a great entrepreneur? And he said, well, when I was a little kid, my father used to always say to me, every Black man who wants to be free needs to know how to own his own business. And I was like, really? I said, so your father was an entrepreneur? He said, no. He was a truck driver. He worked for a company. I said, so how did you learn all this business stuff? He said, well, I learned it in college, because I remember my father used to say every Black man should have his own business. So when I went to college, I was like, oh, well, I'm going to study entrepreneurship. His father gave him the why, and then he went and figured out the how. Do you follow what I'm saying? I hope that makes sense. Okay, so let's see here. Is it wise to get into real estate and then stocks and options? Doesn't matter. Marlon, I think it's easier to get into stocks first and then to go into real estate, because you can buy stocks right now on your phone for $5. Our stock market investing program, our really popular one, is the blackstockmarketprogram.com, theblackstockmarketprogram.com. The first month actually is totally free. You can try it out for 30 days and see if you like it, but it's really good. You can go to theblackstockmarketprogram.com. And there's a ton of curriculum I put in there. It's easy to understand. And all you got to do is sit back and just watch some of the videos. And if you go through even 1/3 of that stuff, you'll know everything you need to know. Like, you'll be teaching your family members these things. Let's see. Joe says, Dr. Watkins, I noticed that the media tried to focus his audience on Trump paying minimal or little personal or corporate taxes. I am by no means a Trump supporter. However, if Trump's a billionaire or corporate mogul, why is that bad? As business owner who is always looking to reduce tax exposure, why is that bad? Well, that's really and that's a very good point. You don't have to be a Trump supporter one way or the other to actually understand why people don't want to pay taxes. People that are wealthy, one big reason they become wealthy is because they have tax write-offs, and they write off everything they can. Like I said, it's more than just a business or a job. It's a culture. For a lot of us, our job is just something we do so we can have enough money to pay the bills so we can survive. But when you are trying to really build wealth, it just becomes a part of your culture. It's like, if I'm the best rapper in the world, then hip hop is everywhere in my life. I'm always thinking about hip hop. I'm listening to music. I've got hip hop stuff on my walls. I speak a certain slang. I dress a certain way. I even walk a certain way, right? So the same way hip hop is a culture, wealth is a culture. So for a lot of wealthy people, you look at Donald Trump, for example. Donald Trump has had that big, gigantic jumbo jet for as long as I can remember. 35, 40 years. He's had this, not an average airplane. This thing is a 747 with his name on the side, because his ego is that big, right? He's always been supersized, whatever. When he was 28 years old, he financed a $400 million building or $400 million project to rebuild the Concord Hotel in New York City at 28 years old. And even back then, he was very confident and like, oh, it's going to be great. It's going to be fabulous. We're going to bring New York. We're going to make New York great again. Like he's literally talking like that 45, 50 years ago. So the reason Trump has this big jumbo jet and he has this really nice luxury helicopter and this big, beautiful yacht is because he's able to get all these things at a discount. He gets them at a discount because these yachts and choppers and everything else, they're not owned by him. They're owned by his corporation. They're owned by they're owned by entities, and these entities buy him these things that he gets to use for business purposes. And it's legal. It's legit. Most of it. I mean, not to say everything he does is legal because, Trump's in casinos and he's worked with the mafia and he's crooked. There's no question about it. He's definitely on that edge where he's probably worried that Letitia James, the Attorney General of New York, is going to send him to prison. And they might pull it off. That maybe that's why he doesn't want to leave the White House. I don't know. But a lot of the write-offs, are legal. It's like, okay, I was on my private chopper going to my private golf course and we're doing business the whole time. He's not making that up. They are talking business, the whole, a big chunk of that time, right? In between, meeting the pretty girls and drinking the liquor and going to the parties, they're doing business, right? And that allows them to have all this stuff, even in years where he's lost money, even in years where he declared bankruptcy. One time Trump, he wrote about this in his book, The Art of the Deal. I read his book 28 years ago because there was a time where people didn't hate Donald Trump before politics. Politics divides people. But if you go back 10 years ago, a lot of the people like Al Sharpton used to love to brag about how he was buddies with Donald Trump. Then suddenly Donald Trump is the enemy because he's a Republican, he's a Democrat, whatever. I don't care about that. But anyway, when he wrote The Art of the Deal, because he was one of the most respected businessmen in the world, one of the wealthiest men on the planet, he talked about a time where he was with his son and he had a bad year. He was eight, I think something. I mean, I want to say 8 billion, but that's a big number. So maybe he was like, let's say he was $1 billion in debt. It was something ridiculous. And he gets out of his limo and he and his son are walking and they see a homeless person. And he says, son, we have less money than that homeless person right there. Right. But we're getting out of a limo and we're walking into a building that I own and, and we're living a really luxurious life. And what he basically was communicating to his son was, it's not just the ownership of resources that makes the difference in the time being. There's also access to the capital, right? Having access to the capital is almost as important as actually owning the capital. So, for example, there are big companies like Airbnb. I don't think Uber still, if I'm not mistaken, has not made a profit. Uber loses probably, I don't know, maybe $1 billion a month or $500 million or some insane, ridiculous amount of money. And the reason Uber can function, even though they're losing insane amounts of money, is because they have access to capital that basically allows them to figure out how to make their company more efficient over time, how to grow and gain market share. And then one day they'll make a profit. Elon Musk for years did not make a profit. Now he's finally made a profit. Tesla's in the S&P. He's worth over $100 billion. Jeff Bezos, for the longest time, didn't make much of a profit at all, if any profit at all. And he didn't care about making a profit. He was okay with losing money because he wanted market share. He said, look, I'll make money later on. Once I get the customer base, then I'll come back and we'll figure out how to offer new products and increase our margins. But right now, we're just trying to grow. We're not worried about whether we made a profit or not. So somebody who doesn't understand business, this gets back to the whole conversation about Trump. Somebody who doesn't understand business would see that and say, oh my God, Jeff Bezos is such a terrible businessman. How can you be a good businessman and you're losing money? Well, a lot of good businessmen and good businesswomen lose money. You can't lose money forever, but losing money can happen, short term for a bigger long-term gain. And also, when you talk about times like this, when you talk about the pandemic, during the pandemic, the most important factor in your business is not how profitable you are. People don't care a lot about that, honestly. They're looking at how liquid are you? How much capital do you have access to that can hold you over through, till the storm's over? Like New Edition used to say, tell me, baby, can you stand the rain? Like how much of the rain can you stand without knowing when the rain is going to come to an end, when all the businesses are shut down? So if you want to measure like some of the quality or some of the aspects that matter for business, it's not just profitability. That's a factor. You got profitability, you got liquidity, meaning your access to capital or access to cash, actually, more specifically. You've got cash flow. Cash flow is a timing factor. Like, okay, somebody owes you $1 million. Are they going to pay you tomorrow, or are they going to pay you 5 years from now? If they're going to pay you 5 years from now, you got a problem. You need to build a financial time machine so you can get access to that money 5 years from now, so you don't go broke today. And anybody who's ever had a time where you get paid on Tuesday, but you got a bill that's due like Friday, and so you owe $100 Friday. They're gonna cut your lights out, but you're gonna get $1,000 on Tuesday. But they don't care that you're gonna get money on Tuesday. They're gonna cut your lights off anyway, and you're like, damn, I don't want to go through the whole weekend without lights and have to go get my lights cut back on. So you're thinking, how do I build a financial time machine? How do I get somebody to loan me money and let me hold some money until Tuesday? Well, basically, you have a cash flow problem, or it's similar to a liquidity problem. Not quite the same thing, but very similar. And then also there's growth. Growth is important too for a company. Sometimes you don't want to be profitable. A company that has a lot of growth opportunities does not need to make a profit. Why are you trying to make a profit? Just grow. Like you have the chance to pump that money right back into your company and make that sucker as big as possible. Well, there are a lot of people that run businesses where they don't want to make a profit, right? So anybody who understands business gets these things. People who don't get it in the media, they're just like, oh, he's a bad businessman because he lost money. Well, he might be a bad businessman. I'm not saying he's not. But if I were to say Trump's a bad businessman, it would be because he does business with the mafia. When Trump built his that $400 million hotel, he was building hotels in New York at a time where you couldn't get big construction projects done without working through the mob. So that wasn't, is that his fault? I don't know, but he's probably got mob ties, because in the 70s, before Rudy Giuliani and some of those other people, Gil Garcetti and the other guy, Michael Chertoff and others, like went and created like RICO laws. Eventually those laws were used against black people. Some of the people are still in prison over these laws. Before they did the RICO laws, they originally created that to go after the big crime families, Gambinos and Genoveses and all that. And so before that, though, the reason they did that was because nothing could get done in New York in construction without going through the mafia. Trump was doing very well during that time when you had to do business with the mob in order for things to happen. That's also, I believe, a part of the reason why Al Sharpton has that mob connection. There's video of him sitting down talking to mobsters and whatever. I'm not even going to talk about that because that's a long time ago, but it is what it is. You can go look it up. He was working with James Brown, who was a performer, and in performing, if you were a performer or a boxer or whatever, the mob was kind of always around. If you're doing anything in Las Vegas, the mob was around. If you're doing anything with casinos, the mob was around. Well, who was one of the biggest owners of casinos out here? Well, Donald Trump. So Donald Trump probably has a lot of shady business dealings for sure, but the fact that he didn't pay a whole lot in taxes, that's not the reason to get mad at him. That's a point where you got to say, okay, well, how did you do that? Right. So anyway, that's my 2 cents on that. Next, Aisha says, fear is what I see. How do you get people out of the fear of success? Fear of getting in trouble with taxes. I don't know. I don't know how you get anybody out of anything. It's hard to change people. You can change yourself, but you got to be willing to change. A person who's not willing to change is hard to change. I spent a lot of my life trying to change people. It doesn't work. So don't try to do that. Just be there for them. Love them unconditionally. Let them know you're available in the event that they want to submit to whatever you need them to submit to in order to change. That's what I do with my family. You'd be amazed how many relatives I have who have no idea what I do, don't care what I do, and are like, enormously talented people who have regular jobs where they're making like, $30,000 a year. And I could easily put them in a position where they could be doing much better. But because their mind isn't expanded to that level, I just don't say a whole lot about it because I don't want to make them feel pressured or to feel like I think that they're less than or whatever. So that's kind of the curse. Being able to having what I call entrepreneur eyes, where you can see opportunity where other people see agony and despair. It's almost like being a little kid where you can see ghosts and you're constantly reacting to spirits and ghosts that you see, and everybody thinks you're crazy because you're reacting to something that they don't see. So sometimes you just gotta learn how to keep your mouth shut. So I think that love is very important, and letting people know that you're there for them. But you draw boundaries, right? You don't let them use you or manipulate you. But at the same time, if they're willing to concede and allow you to influence them, then that's a great opportunity. So for example, when I wanted to lose weight, I had to hit rock bottom before Alicia could convince me to go running. Before that, I was completely against it, and I wasn't open to that idea. But once I got to the point where I nothing else was working, and I really wanted to lose weight, I realized that I had to let go of a part of who I was. Right, I had whatever that side of me was that didn't want to ever go jogging and running. I had to kill that person and say, you don't know what Boyce, you don't know what you're talking about. You need to submit to this woman who's going to make you do something that's different so you can be a different person. You will be a different person when you start committing to different activities and living a different life. So that's what I did. I went from being the guy who didn't exercise at all to the guy who would get up at, 6 o'clock in the morning when it's 8 degrees outside, and I would go run my 3 or 4 miles like I was supposed to. And it became a new habit. And I'll tell you, that is so liberating. Most of us are incarcerated by our habits. Habits are hard to break for everybody, and the best way to break a habit and to become a different person is you must submit. You have to turn yourself in. Like they say to inmates, when they're on the run, like turn yourself into you got to turn yourself in. Just like I surrender. Like, they have in church when they say, just come to the altar and give your life to Jesus. Or when I was born, I was a baby. My mother was 17 years old and couldn't take care of me. So she just gave me to Jesus because she said, I can't take care of this baby. Well, you got to give yourself, like surrender yourself to something other than what you are used to. So that means, like, if you say, God, I'm so sick of this job, I'm sick of being broke, I'm tired of all of this, you must realize that you can't trust yourself anymore because you're the one that put yourself in that situation. It was your choices. When you had your own freedom, you weren't mature enough to use that freedom and drive it in a direction that was going to make you happy, fulfilled, and empowered. So you need to give your freedom up to some source that you trust and let something or someone else take control of that part of your life. Okay, you tell me what I need to do every day, and I'll do exactly what you say. Make sure it's something that you trust. It might be a class you take. You sign up for a class. You say, okay, I'm going to dedicate all my time to doing exactly what I'm taught in this class because I want to be a different person. I want to live a different life. If you don't do that, then you're going to be constantly trapped by your own habits, and you're going to constantly be mad at yourself because you're going to keep living the same repetitive pattern over and over and over again, just like I did when I was fat. Let's see here. Vernoy, are there lists of Black investment clubs that specialize in tax lien deed investing? No, but actually we do have something going on this week. You may be interested in, Vernoy. We have Black Real Estate Weekend coming up the weekend of December 19th. So if you go to blackrealestateweekend.com, that's blackrealestateweekend.com. We're going to have a bunch of experts that are going to come in from every aspect of real estate, from buying your first home to buying multifamily property to commercial property, tax lien investing, tax lien selling, things like that, becoming a real estate agent, all these things. So feel free to go to blackrealestateweekend.com if you'd like to join us. I think you're going to really be happy. All right, so Joe Burrows. Dr. Watkins, I shortened my question. Why does the media focus on political candidates who are business owners or billionaires, lack of tax paying, when tax planning or lowering tax exposure strategies are allowed in the IRS? I don't get it. Yeah, that's okay. I think you might have asked that question earlier. Yeah, it's because media, media is biased, like they've got the liberal media and the conservative media. So the liberal media thinks all the liberals are good and the conservatives are bad. Fox News thinks all the conservatives are good and the liberals are bad. Alicia and I watch C-SPAN. There you go. Let's see here. Do you think it's worth setting up a company in another country? Asked Kimberly. Portugal to save on taxes? No, I don't think it's worth it. I wouldn't set up a company in another country to save taxes until you're up to the point where, you're cranking a couple $1 million a month in revenue and you have a team of accountants and lawyers that can set you up and make sure you're doing everything appropriately, filing all the paperwork. I wouldn't. Now filing in a different state, that could be beneficial. And so actually in the Black Business School, attorney Nicole Compton is very, very good at the logistical administrative aspect of forming a business. And she co-teaches in Black Money 103. BlackMoney103.com is our entrepreneurship program. And she actually has a breakdown of all the steps you want to take to form your business. So Black Money 103 is the third class in the Black Money sequence. So it's 101, which is an introduction to the power of money. 102 is how to invest in the stock market. 103 is how to start a strong Black business. business. 104 is how to buy a franchise. Franchises are often overlooked as excellent opportunities to build a business when you don't have a business idea. The idea is formed for you. They give you the whole template. They give you the blueprint. You pay to buy in, and then you have the franchise. You have the license to use the brand. So franchises are a great way to make money. 105 is real estate. 106 is business structure and processes. So feel free to go to blackmoney103.com if you want to get your business going. Let's see. Danette says, what are some options you would suggest for a couple without children nor trusted family members they can leave their wealth to? No children, no family members. What do you believe in, and what would you like to leave your wealth to? I think that's a great dilemma to have. I mean, well, I'll say a great dilemma. It's a common dilemma. I'm not going to say great or bad. It's up to you to decide how you feel about it. But, I would say this, you can't take it with you, right? You can't take it with you. So you could just say, I'm just going to enjoy my money and just spend it up until I'm gone, right? You could do that. Or you could find a cause that you believe in. You could give it to a charity. I personally, I'm leaving money. I have a daughter and some god kids, and I also have, I'm a bonus dad for my kids that live in my house. Those are Alicia's children biologically, but I'm the father. Me and their dad work together to raise them together. So they're lucky because they have two fathers who are friends, who will coordinate to make sure the children are well taken care of. And so we're very happy that we all get along and everything's great. And so I'm putting all those people in my will. All those kids are in my will. But also in my will is, like, I have your children in my will. The bulk of my estate goes to the Black Business School. Like, the bulk of my assets is structured in a way so that the Black Business School is going to, really benefit in case COINTELPRO comes and gets me. I'm not worried about that because I know the Black Business School will actually be in better shape than it was before, because it'll have more money. And on top of that, I get I'd have the power of, being a martyr or something, right? Like Nipsey Hussle or something. And everybody would want to go and hear what Boyce Watkins has to say because I'm dead, and if that's what it takes to get Black folks to really take economics seriously, then let's go for it. I'd gladly give my life for something like that. And it's really something I thought about because, a human being doesn't live that long, and the game of wealth is played across many generations, and is played as a team sport, with blocks of individuals, not just one person doing really well over a 20-year period. It's a bunch of people doing really well over a 200-year period. So the question is, how do you have a 200-year plan when you're only going to live, maybe your career is going to last 30 or 40 years, but then you're going to be gone, right? So that's where estate planning comes into play. Most of your best teammates in the wealth game, like I don't really care a lot about the ignorance that I see right now in 2020, because I think I have a decent enough perspective where I realize that 2020 just does not matter. 2020 matters about as much as 1985. 1985 has come and gone. The only extent to which 1985 matters now is whether or not somebody did something in 1985 in terms of planting the seed that has grown into something, a full grown sycamore tree by the year 2020. That's the only extent to which 1985 mattered. So if you lived in 1985 and all you were thinking about was 1985, then you missed your opportunity to have a lasting impact on the world, right? But if you lived in 1985 and you could visualize the year 2000, 2010, 2020, 2030, and you said, let me go acquire some assets and position those assets, within my family tree, within my community, within whoever I care about, and position that now. The tiny investments that didn't cost much back then are now worth tons of money now. Like, somebody who's really dedicated in the 1980s could easily have made you into a millionaire today. When you go back to Donald Trump has a lot of wealth now because of decisions that his father made in the 1930s during the Great Depression. That's when Fred Trump acquired a big ton of his wealth, because that was when he actually flipped and went from being a carpenter to actually owning property, right? That's what I have a guy who comes around and he's a young kid, and I just think this kid is awesome, and he can fix anything because his uncle taught him, good values, like good hard work, consistency, and he has skill. Like, I can point to something and say that's broken, and he can fix it, right? And I said, you should own property because you are able to fix things up. You could take something that's crappy and make it good. That's how you become wealthy. So Donald Trump's father made that transition. He went from being somebody who could fix things to a guy who actually owned the apartments that he was fixing up. And that's how he became a multimillionaire. And then what he did was, Donald was born in 1946. So by the time Donald was born, his father was acquiring some wealth. And also during Donald's childhood in the 1940s and 50s, his father Fred was acquiring even more wealth and more power. And so by the time Donald comes of age, maybe around 13 years old or the early 1960s, his father starts preparing him to continue their family legacy, whatever it means to them. I'm not judging good or bad what it means to be a Trump. We don't do that here. And so what he taught his son was that, more important than just education. Education is important, but that's like the first layer of the cake. What's also important is you have to know how to acquire wealth and how to control and protect wealth. If you can't control and protect your wealth, then someone's going to steal it from you, which also requires you to be a fighter. You have to be very tough. So his father sent him to military school when he was 13. So Donald Trump went to military school from age 12 or 13 to the age of 18. And that's why to this day he's always fighting, right? He never, you can say what you want, but he never stops fighting, right? Because his father put that in him very early. And then what he also did was he endowed him with about $25 million to get his first company started when he was about 24, 25 years old. So mind you, by this time, Don had graduated from college. I think he started at Wharton and finished at Fordham or whatever. Maybe he wasn't that smart or wasn't a good student. I have no idea. But at the time where a lot of young people are starting with nothing, he had an endowment. He had $25 million. At a time where a lot of people are struggling, to repay their student loans and taking any job that they can get just to make the loan payments. Trump didn't have any student loans. He was looking to get a business loan. He was looking to get 3 years after that, Donald goes and tries to get $400 million from banks to go and redo the Commodore Hotel. So he was, it's like Kobe Bryant had a great basketball career because he was able to learn from his father, Jelly Bean Bryant, that, look, you don't have to go spend 4 years in college. You can just go to the NBA at the age of 17, right? Let me just give you the skill, get you ready. So Kobe had a lot more years to acquire a lot more statistics than, say, a Michael Jordan, who actually went to college for, I think, 3 years before he went to the NBA. LeBron didn't have to waste 3 or 4 years in college. LeBron went right to the NBA and started his future right then. Whereas Michael spent years in college kind of constrained. If you look at basketball, if you know anything about basketball, you'll know that when Jordan played for North Carolina, he wasn't anywhere near what he became as an NBA player because he was in a constrained system where he was only allowed to do certain things that Dean Smith allowed him to do. So my point is to say that some of your kids are, have the capacity, in my opinion, to be financial Michael Jordans, right? And to be a financial Michael Jordan or to be a financial Kobe Bryant or LeBron James, you want to put a good team around them, right? These guys won championships because they had great teammates. Well, instead of teammates, the teammates might be their family members that are around them, supporting them. Also, the resources, the assets that you give them that they can actually work with. And then you have to give them the skill, right? And then also they need mental toughness. All those basketball players, Jordan, LeBron, and Kobe, are all very mentally tough. And I dare to say this, I don't care what people think about this. Donald Trump may be a jerk, but you cannot say he's not mentally tough. He will fight anybody, anytime, anywhere. That's why his father sent him to military school. That played a pivotal role in his ability to acquire wealth and to protect wealth, right? So what I would say with your children in their own way, in a Black way, teach them those skills early so that they're ready to really go out here and really do some things and get some things done. Okay, so last question. I'll take is Glenn Ford says, I want to financially empower my daughter who will be going to college next year to pay her way through. What are your options? Would your options course teach her how to do that well? Yeah. You know what, Glenn, if you put your child in the options class and she learns how to pick the right stocks and right call options on those stocks as a way to generate income, you'll be doing exactly what I'm doing with my 17-year-old. Our 17-year-old is going to college next year. And I don't force things on young people, and he's not my direct son, so I have to be very careful because I'm the bonus dad, and we have real challenges like any other family. When a new guy comes, is in the house, you got to establish a rapport with the son, if you know what I mean. Sons can be protective, and when I moved in the house, he was about 13, so it's kind of like, okay, who is this dude? And we had some rough, we had some real interesting situations that emerged. Fortunately, it didn't get too bad because he's a really good kid. And what I basically said to him is I said, look, if you want to go to college, if you don't have to listen if you don't want to, but you can go to college and do what I did. You can go work at like a hamburger joint and make minimum wage or whatever and hope for the best. Or you can actually learn this technique I have where I can give you some capital and you can write stock options every month and generate more money writing stock options than you could ever make, working a job. And you don't even have to go to work to do that. And so with him, it's like a matter of him wanting to learn it. Like, I don't believe in just coddling kids and just giving them stuff that they don't want and forcing things on them. But I've given them that option. And so if your daughter's smart enough to take that opportunity, like you give her a little capital and maybe you put her in the options class as a gift and she learns how to write call options and how to pick, like I go through a process where I show you like how to go to, how to find the stocks that you actually want to put in your portfolio, how to write the options, how to figure out what your monthly income would be. I think that's a great way to make money in college. And so with our 17-year-old, I speculate he could make at least, $1,000 to $1,500 a month just writing call options. That way he doesn't have to get a job or whatever, but he has to earn it. Right. So with your daughter, I think that's a great idea. And the best endorsement I could give to an idea is to say that I'm doing that myself. This is not investment advice. I'm supposed to say that for legal reasons, but I can definitely say that this is what I do. This is actually something that we actually practice. So the URL for the stock options masterclass is stockoptionsmasterclass.com, and you can go check out the recordings. So feel free to go and take a look at that. Okay. All right. So it was really fun talking to everybody. And so everybody in the Powernomics masterclass, if you have an investment club that you'd like to start, or you have one that you have started and you want membership or whatever, maybe you can email your contact information to support@theblackbusinessschool.com. Tell them that you'd like for us to mention your group or your investment club to the group, and I'll just announce it, and then people can get in touch with you and you can formulate your group right out of the Powernomics masterclass. So feel free to just email. The email address is support@theblackbusinessschool.com. That's support@theblackbusinessschool.com. All right. So I hope that this was helpful. This was a lot of fun. And one thing to remind you is in case you don't know, the Black Wealth Bootcamp starts on January 7th. So you can go to blackwealthbootcamp.com if you want to go take a look at that. And also Black Real Estate Weekend happens on the 19th. And that's blackrealestateweekend.com. So blackrealestateweekend.com, where we have all these experts that are going to come in for the whole weekend. It's really, really great. And then also the Black Wealth Bootcamp is just me. And I'm breaking down basically everything you need to know when it comes to reducing your economic dependence on the corporate plantation. That means either the ability to quit your job or the ability to not be dependent economically on your job. That's the goal of the Black Wealth Bootcamp. That's blackwealthbootcamp.com. And then next week on the 17th, we're doing Black Movie Night, and we're bringing in filmmaker Mark Harris. This is something we do for the Black Business School students, so we can also support a Black-owned film industry. So Mark Harris is going to come through, and if you want to join us for Black Movie Night, his film is called Stock Option, actually, and but it's like a love story. And so you can feel free to go to blackmovienight.net. That's blackmovienight.net. All right, that was a mouthful. I said a whole lot. I hope this was helpful, and I enjoyed talking to you guys. So have a great day, and I'll see you all